The fact of the matter is Apple or Tesla would not exist in the form that they do today if it wasn't for this one dividend stock, whether it's the Mars rover or you putting toaster in the toaster oven. In fact, this dividend stock touches and reaches every single one of the S&P 500 companies, which is why in 2023, I'm putting all my new invested capital into this one dividend stock, yet nobody is talking about it. So I'm going to be breaking it down in this video. And if that is a conversation you think you'd appreciate, damn it, hit that like button, folks. Firstly, let's take a look at Apple's underlying fundamentals to do a one-for-one comparison to this dividend stock heading into this recessionary environment. Apple, we can see in the middle the EPS, the growth of the underlying cash flow. We can see the price of the stock itself. And then at the very bottom, we have the PE ratio, the price to earnings multiple. And we can see Apple peaked in about Q4 of 2021, and the EPS growth has flatlined ever since, leading the stock to retrace by about 25 to 30%. And we're seeing the PE ratio start to drop down between 20 and 21, which historically the PE ratio tends to trade around 15 to 16. Yet this company, this dividend stock we're discussing here, has seen the biggest growth period that it's basically seen throughout its entire history, literally in 2022, yet the stock price has retraced by about 45 to 50%, and the PE ratio is now back to its historical average of around 12. This company's month-over-month growth on a year-over-year basis, just taking a look at it based on the monthly change in revenue, is actually excelling through 2022. We can see at the beginning of 2022, their year-over-year change was between 35 and 50%. Now it's hovering between 50 and 60% and is kind of maintaining that growth rate throughout the entire year. It is rather hard at the scale of this company to wrap your head around this kind of growth in an environment like this, and we're talking about Taiwan Semiconductors. It trades on the New York Stock Exchange under the ticker TSM with a current dividend yield of 2.4%. We're going to briefly break down a PE right now of 13 and a market cap of 368 billion. This frustrates me immensely because it's one of the top 15 largest publicly traded companies globally, yet for some reason it doesn't even trade next to Nvidia on the Vanguard Total Stock Market Index Fund. In fact, most of the global market index funds do not market cap weight this stock in any of their lists, which kind of blow my mind because Nvidia is currently trading at a market cap of 359 billion and its PE is 6 times greater than TSM. Yet Nvidia can't even function without Taiwan Semiconductors. Nvidia is one of their largest clients. I can't wrap my head or fathom why, but nonetheless, this came on my radar because of Berkshire Hathaway. The billionaire investor Warren Buffett, yes, in the last quarter, they added Taiwan Semiconductors of about $4 billion worth invested. And this led me down this very intense rabbit hole that made me realize why this company is so important, not only globally, but for my portfolio specifically. But first, if you don't understand semiconductors, I'll explain it briefly, but let's talk about the moat and why it's likely that Warren Buffett bought this stock. Firstly, it makes up over 50% of the entire semiconductor industry, which is just insane. And if you look at by revenue, their revenue is untouchable because the technology they have is greater than any of their competitors, meaning if you combined all their competitors together, they still wouldn't equate to the same exact revenue, which is just hard to wrap your head around the scope and the importance of this company and what it would mean to your life if they disappeared tomorrow. From a dividend growth rate, guys, this company in its recent growth cycle has been raising the dividend just exponentially. It's crazy. Look at this. From 2015, from 72 cents, and this is on an annual basis, it looks like they switched to quarterly, but even still, from 2015 to 2019, guys, look at that. From 72 cents to $1.28. This thing is a dividend growth beast, unlike any dividend stock I've seen in recent years here. When you're taking a look at the payout ratio, right now they're only paying out 32%, and this company is largely not even held by institutions. The float outstanding is only held by 17.5%. Let's just take a look at the factory itself here, give you some insight into this main factory in Taiwan, and then I'm going to talk about some of the geopolitical risk and how this company is dealing with it.
The speed of these chips relies on how many transistors you can cram into a tiny space. And when I say tiny, I'm talking nanometers. So even specks of dust would matter.
I don't really know how to describe how fine that 5 nanometer or 7 nanometer is. But I think people very often say, if you look at 28 nanometer, it was like 1/1000th of the diameter of a human hair.
In this fully automated factory, the lights are kept yellow to protect the product, and the machinery is moving all around. But there are quite a few things in here we're not allowed to film, because this is seriously cutting-edge technology, so it needs to remain pretty secret. Between all the automated devices in this facility, they travel 400,000 kilometers a day. To put that into context, that's 10 times around Earth. All of this is about the concept of keeping up with Moore's law, as predicted by Intel engineer Gordon Moore in the 60s. It refers to the doubling of transistors on a chip every 2 years, whilst the cost is halved. A concept increasingly hard to keep up with, despite us expecting a lot more from our ever-connected lives.
It is truly hard to understand the scope and the impact this company has, whether it's from self-driving, even in the crypto world, computers, Google, the cloud, all of that stuff is enabled primarily specifically by Taiwan Semiconductors. Now, there's some big concern about this company because obviously there's geopolitical events, there's fear of China invading Taiwan. We know now why China has such a big eyeball on Taiwan because of the scope and power of companies like this. But out of that fear, we're seeing them, unlike many companies in China, actually expand globally and partnering with the likes of Apple here, because we can see Biden joins Tim Cook to hail TSMC's $40 billion US chip ventures. They're building 2 massive facilities in Nevada, along with, and this is again, $40 billion invested is just unfathomable. This factory is going to be online by 2024, but they're also trying to sign deals right now to build other facilities in Europe. This company is growing on a global scale right now at a rate that can't be held back. This thing is a freaking rocket ship, and nobody out there is discussing it. And I looked at my portfolio, and if there's one thing that I've discussed about it, it's I've always felt like something's missing. And every time I'm asked about foreign stocks, I just don't feel comfortable buying them, because I used to hold BABA, but I see how, the entire stock market is like Pokemon cards. It's all Fugazi. A lot of it is based off just perception. And when you're looking at companies like Tesla, as much as I love it, it's hard to wrap your head around buying a company that doesn't have the primary growth factors it needs to be at the value it is with self-driving. As much as everybody's going to tell you Tesla's a buy, until self-driving or the vectors that give it the value it does exist, there's no point really buying it. And I just can't figure out what my portfolio was missing. And now I found it. This is going to give me the global exposure that I need. It is a dividend stock. If you are a value investor, it meets all the value metrics that matter. And when Warren Buffett is paying attention to this company, when no other institutional investor is, and it doesn't sit on any major global market index fund, I just can't figure out why this thing isn't the buying opportunity of a damn lifetime. And my goal here is to make it probably about, I'm going to try and get it up to about 5% of my entire invested portfolio, meaning that it'll be up there, next to Royal Bank, because with my position in VDY and the scale and the percentage weighting, Royal Bank fits in VDY, makes it my largest current holding at about 5%, or about 20,000 invested. And I really want to get, using this cash that I have here, I'm probably going to invest about 17,000 of this over the next month through my tax advantaged accounts into Taiwan Semiconductor. Now, this obviously might not be the stock for everybody, but it really fits into my investment style, my risk tolerance, and I've been really looking for some companies to add, and I think this is going to be one of them for 2023.